Hi, and welcome to my daily market report. My name is Mike, and what our report basically entails is mortgage rates on a daily basis. We kind of look at mortgage rates. A little bit of background about myself. I am a loan officer, and I do work with a national lender. And so I watch rates on a daily basis and want to kind of spread that out to folks like yourself who may not be, you may see the news, but unfortunately the news is kind of a little late in the day in terms of where rates are at because they're taking the Freddie Mac's or uh, weekly report that could be last week's, and lo and behold, we may have had several price changes in one day. Stocks are Mortgage rates are a lot like stocks; they do get traded on packaged and sold on Wall Street just like stocks, and we do have fluctuations in mortgage rates. So this is some of the data that I like to kind of go over for you folks on what drives interest rates and how it goes. So on a daily basis, I kind of do these reports, and I hope you like. We'll start off with the economic reports today, and today we got the first of the jobs numbers we'll see this week, and that is the ADP National Employment Number. Last month, back in January, we had 174,000 initially reported. However, that was revised upward to 195,000. Forecast was supposed to be in that same range, about 177,000, but it came in quite disappointing at 117,000 new jobs created. This is for the private payrolls. We also got ISM non-manufacturing PMI. This is for the services sector. So anything above 50 on this index indicates expansion. So in January we had a 58.7. Forecast was supposed to be unchanged at 58.7, and it came in a little bit lower at 55.3. So we saw a little bit of, according to ISM, a little bit of a dip in the services sector. So let's go ahead and jump to see what's going on with the headline news. Stocks are a little mixed today. Dow is in positive territory. The rest are in negative territory. We kind of start off in Europe. Basically, we had some good European data, and then now suddenly they start selling on their treasuries. So their versions of it. So their uh, bonds and that stuff. So we started seeing a spike in increase. Vaccinations. We had a report that Biden wants to increase, basically could have accelerate the pace of the vaccinations and basically have all the adults vaccinated by end of I think it was May, and trying. So investors are watching how soon we can get back to normalcy, reopening. We are having a few states basically saying they're going to reopen everything, no masks and stuff like that. Updates. We're seeing that kind of happening. I think like Mississippi, I forget what other state. I think Texas is kind of reopening a bit. So more in the south, we're seeing some of those reopenings. But to touch on the European data, the sell-off on the bonds, we're kind of seeing that here now. We have a bit of a sell-off going on right now, with kind of moved over into across the pond over to us, and now we're down about 28 basis points. So it translates a little bit higher rates today compared to what we saw yesterday. But again, that's about a quarter point, so it translates to maybe 1/8 of a percent in the rate that we'll see a change so far today. We'll watch this. It's been very volatile, like last week, as you saw here. Last week was really volatile. We did make up some ground on that, but not quite. We were hoping to make up a little bit more of that ground, but sometimes again, these comes in peaks and valleys. We'll have to watch and see if this is end of the line for the rally for bonds, or if it gets pushed down further. But speaking of such, here's yields. Yields are on the upper part of the trend line here, and that is at 1.477 or just under 1.48 on the yields. So again, the magic number seems to be right around the 1.5 range, and that's kind of what they're. It's more of a psychological number for traders, and that's kind of what they're watching. And of course, stocks are concerned primarily because uh, this raises the cost of borrowing costs for, of course, corporations and such, and it makes it more difficult for them to um, expand as what they're looking for. So now they have to kind of look at different stocks as to that may be adverse to the reaction to uh, the interest rates. All right. So if you guys got any questions, please feel free to reach out. As I indicated, I am a loan officer. I do work with the national lender. If you got any questions about rates, or if we got questions about if you want me to review any refinance or discuss any refinance options, we can certainly talk about that. If you guys are thinking of maybe buying and want to get pre-approved, we can talk to you about that as well. We can certainly help in all those categories. So please feel free to reach out. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.